But today we got what makes up the value of an option. You can go ahead and jump to the first slide, T.
Sure.
So there are two components that make up the value of an option, and those two components is called extrinsic value and intrinsic value. And we're first going to touch on extrinsic value. So extrinsic value, also known as time value, is the portion of an option's premium that exceeds its intrinsic value. In simpler terms, extrinsic value is what you're paying for, the potential of the option to increase in value over time. It diminishes as the option approaches its expiration date because there's less time for the underlying asset's price to move in a favorable direction. So extrinsic value is crucial for options traders as it represents the premium they are willing to pay or receive for the opportunity to profit from the future price movements. So extrinsic value. So there's two components that make up the value of an option, and there's actually two components that make up extrinsic value.
Yeah.
And those two components is time and volatility. So where does a time component come in? Obviously, we know there's a time component to every contract, but that really starts with which expiration date you first choose. And that's going to dictate, depending on the expiration date that you choose, it's going to dictate how much extrinsic value is going to be in those contracts that you have to select from. So the further out in time you go on the option contracts, typically when you open up that options chain and that expiration, if you go further out in time, typically those options in general are going to be worth more than the options that you choose that have a shorter time expiration date, like a 0 DTE or an expiration that expires at the end of the week or an expiration that expires at the end of the next week. So the further out you go in time, the more extrinsic value, the more valuable the options are going to be worth, because that has everything to do with the extrinsic value. Because if we think about intrinsic value, and I know we haven't touched on it, but if we think about intrinsic value, the intrinsic value is the same right now in the 0 DTE expiration. It's the same on an option contract. It's the same as the at the money contract in the 0 DTE. The intrinsic value is the same as the option contract 30 days to expiration. The intrinsic value is the same as an option contract that expires in 60 days. But what's funny is if the intrinsic value is the same, but the overall contracts are more expensive as you go further out in time, but intrinsic value is the same in every single one, that has to tell you the thing that is changing in each expiration is the extrinsic value. Because if right now the intrinsic value on right now, let's say we open up Apple and let's say Apple's trading at $50. If we look at the 0 DTE option that is in the money, so let's say the 48 strike, that has 2 points of intrinsic value. If we go to the option that expires in 30 days right now on Apple, the 48 strike, and the Apple's stock price is trading at 50, that 30 DTE option still has 2 points of intrinsic value. So the further out I go in time, it's still the same intrinsic value right now. But the further out I go out in time, the extrinsic value is different, because the further out I go in time, the more time value is added. So if I go 30 days out and then I go 60 days out, there's more time value. That means there's going to be more extrinsic value, because time is one of the components that makes up extrinsic value. So it just lets you know how dynamic extrinsic value is, and just how time and volatility is two of the components that make up extrinsic value. So let's go ahead and jump to the last slide real quick, and we'll go back over this and we'll actually put a trade on Wednesday. But intrinsic value for a call option, intrinsic value is the difference between the current price of the underlying asset and the strike price. If that difference is positive for a put option, intrinsic value is the difference between the strike price and the current price of the underlying asset, if that difference is positive. So like, it's just like we just talked about. If Apple stock price is trading at 50, 48 strike on the calls, those are going to have 2 points of intrinsic value. It's so simple. Intrinsic value is very easy to calculate. It's so straightforward. If Apple's stock price is trading at $100, the 70 calls have 30 points of intrinsic value, because the stock price is 30 points above that strike price. So it's 30 points in the money. So that's why it has that many points of intrinsic value. Super simple to calculate. Very simple to say too. Again, if Apple stock price is at 100, and you're looking at the 95 calls, those right now will have 5 points of intrinsic value, because they're 5 points in the money. So in simple terms, intrinsic value is what an option would be worth if it was exercised immediately. If an option has no intrinsic value, it is said to be out of the money for both call and put options. However, options always have some level of extrinsic value, which reflects factors such as time until expiration, volatility, and interest rates. So option has no intrinsic value, said to be out of the money. Yeah. So, and it makes sense. Like, we always look to sell contracts where we can collect a decent amount of credit. And we're always looking to collect contracts that have a good amount of credit. And typically what offers a good amount of credit is the option contracts that have a lot of intrinsic value. So again, that's why we'll go into the 35, 40 days to expiration, because those will a lot of the times offer a good amount of extrinsic value, because they have a lot of time value left. And then obviously our goal is for those to expire out of the money. Our goal is to get extrinsic value sucked out of the contract throughout the duration of that trade. That's our goal. Our goal is for volatility to decrease and time to run out. And obviously we want those to finish out of the money. We want those to finish with no points of intrinsic value. Why? Because something can have no extrinsic value and have some intrinsic value. And obviously that's going to hurt you, because you want the contracts to be as cheap as possible. And in the best case scenario, go to zero. But there's two components that make up the value of a contract. So even if the extrinsic value goes to zero, if it's in the money at all, you're not going to reap the reward. But that is extrinsic value and intrinsic value. We're going to touch on this again. I know we kind of just ran through this kind of quickly, but we'll obviously, like we did last week, go into the platform and actually do something that's a little bit more applicable with what we just talked about. So that's intrinsic value and extrinsic value, two components that make up the value of an option. So I know I was talking a lot, T. Anything you want to get out?
You're good, man, bro. You're doing your thing. Yeah, it really makes sense. Like, when you think about it, it's fairly simple, I think, or not. I won't say simple, but I don't know. I see how they're used. It makes sense, and it helps you kind of understand what an option is. So and appropriate.
Yeah, and this is a type of information that is good to just know right now. Like, it's not like do anything in your brain with it. It's more of just soak in this knowledge right now, because once we start talking about delta, this and that, by knowing this your foundation of knowledge from this, understanding the fundamentals and how things work, it's going to help you understand the other factors that we then pull in. Like, but right now, this isn't something to try and connect the dots with. It's just soak in this knowledge, invest it, understand it, and then you're just building a really solid foundation, because you're going to have other questions that you're going to naturally have, and you're going to be able to answer them yourself by understanding this base knowledge.
Yeah, it's like a lecture before a lab.
So. Exactly, 100%. So everybody, thanks for hanging out with us.